Welcome back, everybody. We're diving deep today, going way beyond those usual headlines about Ujjivan's small finance bank's Q2 FY25 results.
Looking forward to it.
And what makes this deep dive extra special, I think, is that we're not just working from their press release and investor presentation. You actually sent over their full auditor's report, too, which is amazing.
Absolutely. I think you'll find some pretty interesting stuff in there.
Yeah, and I'll admit, banking results, they're not always the most thrilling thing to dig into, but Ujjivan, their story right now, it's like there's this real tension. They're trying to grow really fast, but also got to be super careful about risk, especially with, the economy being a bit shaky.
It's a tricky balance to strike, for sure.
Yeah, and it's funny, like you see that tension right away in their top level numbers. So their loan book, it grew 14% year on year, which on the surface sounds fantastic, right?
Yeah, pretty impressive.
But then their profits actually dropped 29% compared to the same time last year. So what we're going to try to figure out today is what's really going on here. What's driving those seemingly kind of contradictory trends?
Yeah, you hit the nail on the head. It's a puzzle worth unraveling.
Yeah.
So let's start with that loan book expansion. Ujjivan is very proud of hitting that 30,344 crore mark.
Right, big number.
But if you look a bit closer, there's a really deliberate shift happening. They're moving more and more towards secured lending.
Okay, so less of that traditional microfinance model, like the tiny loans with not a lot backing them up, and more towards loans that have some collateral, like maybe a house or something.
Exactly. Secured loans now make up 34.9% of their total portfolio. And that's up from 31.3% just last quarter. So it's a pretty noticeable shift.
Yeah, definitely a trend. And this kind of ties into what Ujjivan's MD and CEO Sanjeev Nachyal is talking about in the press release. He mentions, pockets of stress in the market and being cautious, particularly with microfinance.
Makes sense. If the economy's a bit wobbly, it's the smaller borrowers who tend to feel it first.
Right, totally. But here's where that auditor's report you shared gets really interesting. They spotted something pretty unusual with Ujjivan's non-performing assets. Their NPAs, for those who like the jargon.
Ah, yes. Section 11, I believe. They highlight that Ujjivan's got 10,000 lakhs set aside, money they could use to cover potential loan losses.
Okay, so like a rainy day fund in case those loans go bad.
Exactly. But here's the thing. They're not actually using it to make their current numbers look better. It's not factored into their reported net NPA ratio, which sits at a very healthy 0.56%.
Wait, so they're basically saying, hey, we've got this extra cushion just in case things go south, but they're not using it to sugarcoat anything.
It does seem like a remarkably transparent approach, and it suggests they're being very conservative, maybe even overestimating future losses. It really makes you think about their strategy, doesn't it? What do you make of it?
It's like they're saying, look, we want to be rock solid, super reliable, even if it means maybe they can't grow quite as fast right this second, like prioritize stability above all else.
That's a great way to put it. And in a market where a lot of folks are nervous about risk, that could actually be a real advantage.
Right, almost like a competitive edge.
Precisely. And, this cautious approach, it's not just about the existing loans either. Ujjivan is very clearly trying to branch out beyond that traditional microfinance base. Their investor presentation, it's full of this talk about a comprehensive suite of products targeting, all sorts of different customers. This isn't your grandma's microlender anymore.
I was just looking at the charts in their investor presentation, and you can really see what you're talking about. Like, take their retail term deposits. They're up 35% year on year. So they're definitely attracting more of those traditional banking customers, the ones who are just looking for a safe place to put their money.
Absolutely. And if you look at the breakdown of their loan book, you see sectors like affordable housing and lending to other financial institutions, what they call FI. Those are growing rapidly.
So they're spreading their bets, huh? Not putting all their eggs in the microfinance basket anymore.
Smart move, especially in these times.
Yeah.
It's all about building a more diversified portfolio, reducing their exposure to any one particular area. And this ties back to what we were just saying about their cautious approach, their emphasis on stability. They're not just talking the talk, they're actually walking the walk.
Okay, so we've got this picture of cautious growth and a real push towards diversification. But what about the digital side of things? Because Ujjivan, they're making a big deal about their app in that investor presentation. Hello, Ujjivan. It's got all the bells and whistles, vernacular language support, self-onboarding, all that. They're clearly trying to position themselves as super tech forward.
Yes. Definitely making a push on that front. But there's a little detail tucked away in Section 14 of the auditor's report that I found rather interesting. They haven't yet fully implemented the Reserve Bank of India's guidance on reporting digital banking as a separate segment.
Interesting. So maybe their digital transformation is still a bit of a work in progress. Like they're talking the talk, but maybe haven't quite walked the walk yet.
It's certainly something to keep an eye on. They're clearly investing in digital, but full integration and transparency in their reporting might still be a little ways off.
So let me just recap what we've learned so far, just to make sure I'm following along. We've got Ujjivan being super cautious with their growth. They're diversifying their offerings like crazy, and they're definitely pushing that digital agenda, though maybe not as far along as they'd like us to think.
Pretty good summary.
But it still brings us back to that initial head scratcher, right? How do you have strong growth, but profits are actually going down?
Yeah, that's the million rupee question.
Yeah.
And to understand that, we need to dive deeper into their profitability puzzle, because that press release shows a 29% year-on-year drop in their Q2 profits. And there are a couple of key factors at play here.
Well, let's unpack those factors. What's causing this profit dip, despite all the growth they're seeing?
All right, well, one piece of the puzzle is that cautious approach we keep talking about. Remember those conservative NPAs and the shift to secured lending? While those moves might be really good for long-term stability, they could be impacting their bottom line right now in the short term.
So it's like they're taking a bit of a hit now to build a stronger position for later.
Precisely. But it does raise the question, how long can they afford to do that? And is it the right strategy? It's a tough call.
It really is. And I'm curious because despite that profit drop, there are signs that their core lending business, the heart of what they do, is actually pretty healthy.
That's right. We can see that in their net interest margin, what they call NPA. Yeah, it's essentially a measure of how profitable their lending activities are. And theirs actually increased by 39 basis points year on year, reaching 9.2%.
So their core business is doing all right, even if their overall profits are down. That seems like a good sign, right?
It definitely suggests that their core operations are solid. But to really get the full picture and figure out whether this whole strategy is going to pay off in the long run, we need to look at some other key metrics.
All right, well, let's take a quick break. And when we come back, we'll do exactly that. We'll get into the nitty-gritty of Ujjivan's financials and try to solve this profitability puzzle once and for all. Stay with us.
We left off talking about Ujjivan's profits. They're down, but their growth is strong. To really figure out what's happening, we have to go deeper, beyond just those top-level numbers.
Right, got to peek under the hood and see how it's all working. Or not working, I guess. We were just starting to talk about NEM, which sounded like a pretty important thing to understand.
It is. NEM stands for net interest margin. It's basically the difference between the interest that Ujjivan earns from giving out loans and the interest they have to pay out on deposits and other borrowings. It's like their profit margin, but specifically for their lending business.
Okay, so a higher NIM means they're making more money on each loan they give out relative to, what it cost them to actually get that money in the first place. And theirs went up, you said.
Exactly. It's at 9.2% now, a good 39 basis point increase compared to last year. It's a good sign, definitely. Shows their core lending business is still doing pretty well. But it's not the whole picture, We also need to look at other things, their cost of funds, for example, and their operating expenses. Those play a big role too.
So even if the NIM is good, if their other costs are skyrocketing, it could still eat into their profits, right?
Exactly. One thing that's actually positive is that their cost of funds has come down a bit. Part of that is because they've been successful in attracting more low-cost deposits. Remember we talked about those retail term deposits earlier?
Yeah. So they're getting better at managing the money coming in. What about the money going OUT, though? Those operating expenses?
That's where we see a little bit of pressure. Their operating expenses, they've increased, mainly because of higher employee costs and also investments in technology and their branch network.
Okay, so they're spending more to grow and modernize, basically, which, it seems kind of necessary, but obviously it's going to impact their short-term profits, at least.
It is. It's a classic trade-off. Investing for the future, which could totally pay off down the line, but it creates a few bumps in the road right now. It goes back to that whole balancing act we keep talking about, right? Balancing growth with risk, balancing short-term profits with, long-term sustainability.
Speaking of which, before we get totally lost in the world of financial ratios and stuff, I wanted to circle back to something we touched on earlier. Ujjivan's efforts to diversify beyond just microfinance. They're talking a big game in that investor presentation, but are they actually, putting their money where their mouth is?
Great question. And to answer that, we need to dig into how their customer base is evolving. Remember all that talk about their comprehensive suite of products aimed at all these different customer segments? Well, they're actually categorizing their customers in a really interesting way.
Oh, yeah, you mentioned this. Something about asset only, liability only, and what was the third one?
Asset and liability.
Yeah.
Think of it like this. Imagine you walk into a bank. You might be there to take out a loan, right? Like a mortgage or a car loan. That would make you an asset-only customer from the bank's perspective.
Okay, makes sense. Because you're taking on debt, which is
Yeah.
an asset for the bank.
Right. Or maybe you just want to deposit some money into a savings account. You'd be a liability-only customer in that case.
Because the bank owes you that money. Got it.
And then some people do both, right? They might have a loan A and D, a savings account. So they're both an asset and a liability to the bank. Ujjivan's using these categories to track how their customers are actually using their different products.
So it's a way to see if they're really attracting those new customer segments they're going after. So what does the data tell us? Are they successful?
Well, that chart in their investor presentation, it shows that all three segments have grown. But the biggest jump, by far, is in liability-only customers. They went from 33.4 lakh last September to 41.2 lakh this September. A pretty big increase.
Wow, that IS significant. So way more people are seeing Ujjivan as a place to put their savings, not just borrow money.
Exactly. It's like they're becoming a more traditional banking option, not just a microlender. And this matches up with that 35% year-on-year increase in retail term deposits we talked about before. They're clearly pulling in those traditional banking customers, the folks looking for a safe, reliable place for their money.
It's a pretty big shift. It makes me wonder, though, does this move towards a more traditional model? Does it mean they're kind of, diluting their original mission, that whole financial inclusion thing? Are they moving away from serving those folks who need microfinance the most?
It's an important question. And honestly, it's a tension that a lot of microfinance institutions face as they grow. Diversification can definitely make them more stable, more resilient, but it's super important that they don't lose sight of their social mission in the process.
It's a tough balance, for sure. But even if they are attracting more of those traditional customers, what about their, bread and butter, those microloans that they built their whole reputation on? Are they still doing that?
Well, remember we were talking about their cautious approach, especially when it comes to microfinance. That's definitely reflected in their loan disbursement trends. Their overall disbursements were up slightly quarter on quarter, but their microgroup loan disbursements actually decreased, like 6% year on year.
So they aren't tapping the brakes on microlending a bit, which makes sense, given their worries about risk in that area. But it's interesting because they also talk a lot about, their commitment to financial inclusion in their investor presentation. How do those two things square?
They're trying to walk a very fine line, it seems. They're not completely abandoning microfinance, but they're being way more selective about where and who they lend to.
So it's not enough to just say, hey, we're a microfinance bank. They actually have to navigate that space really carefully and balance it with these other growth opportunities.
Exactly. It's about finding a sustainable path. One that lets them manage risk, stay true to their mission, A&D evolve with the market. And speaking of sustainability, we should probably take a look at their overall financial health. We've talked about profits being down, but there are other things we should be paying attention to, right?
Yeah, totally. What are we looking for? What tells us if they're financially sound beyond just profit?
Their capital adequacy ratio is a good place to start, or ACAR, if you like acronyms. It basically tells you how strong they are financially, like how well they can absorb potential losses.
So it's a measure of how well capitalized they are, how much of a cushion they have if things go bad.
Exactly. And Ujjivan's CRAR, it's at 23.4%, way above what's required by regulators. It means they have a strong capital position and a good buffer if any unexpected challenges pop up, like a good safety net.
So profits might be under pressure for now, but their overall financial position seems pretty solid.
That's what it looks like. It's another piece of that complex puzzle, right? They're being cautious, diversifying, building a strong foundation. The question is, will all of that be enough to make sure they're successful in the long run?
That I ask the big question. And to get closer to an answer, I think we need to explore the last piece of the puzzle. What they're planning for the future, what are their big plans for growth, what challenges do they see coming, and ultimately, what does all of this mean for, anyone listening who's trying to make sense of this whole story?
Those are the exact questions we'll be tackling in the final part of our deep dive. Stay tuned.
All right, we're back. Ready to tackle that last piece of the Ujjivan puzzle, their plans for the future. They've laid out, their roadmap in the investor presentation, but I'm curious, what are those key strategies they're really focused on?
Well, they've got six main growth strategies. And it's interesting because they all kind of tie back to that balancing act we've been talking about all episode. Managing risk, diversifying, staying relevant.
Okay, so let's hear them. What's priority number one?
The first one is all about developing what they call a, quote, comprehensive and relevant product suite. Basically, offering a wider range of products, services that really cater to different customer needs.
Yeah, we've already seen them moving in that direction, right? With those affordable housing loans, the financing for financial institutions, sounds like they're really doubling down on that diversification strategy.
Exactly. It's not about just, like, adding products randomly. They're focused on solutions that are relevant to those specific customer segments they're trying to reach. Responding to those trends we were talking about before, like the growth in those retail term deposits and, the shift in their customer mix.
So they're listening to the market, trying to keep up with, how things are changing. What's strategy number two?
No surprise here, it's all about digital banking and analytics. They're putting a huge emphasis on this, aiming to become like a truly digital-first bank.
We talked about their app. Hello, Ujjivan. They're definitely trying to, reach a wider audience, make banking easier and more accessible.
Yeah, and they're going even further, investing heavily in that digital platform, exploring partnerships with fintech companies, using data analytics to give customers more personalized stuff.
So embracing the fintech revolution, huh? Smart move. What's next?
Number 3 is about building a stable and granular deposit base. It's all about getting more deposits, especially from retail customers, so they don't have to rely as much on borrowing money to fund their lending.
So diversifying their funding sources, which could, potentially lower their cost of funds too.
Exactly. Remember how we talked about their NIM being a little under pressure? Well, a strong deposit base can really help with that, makes them less reliant on those more expensive ways of borrowing.
Okay, makes sense. Strategy number four.
Expanding their distribution and collection network, reaching more customers through branches, but also alternate channels like mobile and internet banking.
So expanding their physical footprint, but also making it easier for people to bank with them digitally.
Right, meeting the customers where they are, basically,
Yeah.
whether it's in a branch, on their phone, whatever.
Okay, so far we've got product diversification, going digital, focusing on deposits, and expanding their reach. What else is on their list?
Their fifth strategy, it's pretty interesting, given their history with microfinance. They're still putting a lot of emphasis on financial and digital inclusion.
So not forgetting their social mission, even as they get bigger and, branch out.
Yep. They're still committed to empowering those underserved communities, promoting financial literacy. They talk about partnering with organizations like Paranam Foundation to actually deliver financial literacy programs. And their work creating Kisan Brigadi clubs to support farmers.
It's great to see they're not just focused on profits. They're actually using their expertise to make a difference. Okay, what's that final growth strategy?
Last but not least, diversifying their revenue streams. So finding new ways to make money beyond just interest income from loans. They're looking at things like treasury operations, bank assurance, fee-based services, stuff like that.
So not putting all their eggs in one basket, which, makes total sense given how, the markets can be a bit crazy sometimes.
Totally. Building a more resilient, sustainable business model, one that can handle, whatever the economy throws at them.
Okay, so Ujjivan has a pretty solid plan for growth. But let's be real, it's not all going to be smooth sailing, right? What are some of the challenges they're going to have to deal with?
Well, for one, there's the whole external environment. We've already talked about the economy not being great, especially the stress in that microfinance sector. They've got to manage those risks and make sure their loan quality stays good. That's going to be huge.
They can't just ignore those risks, for sure. What else are they up against?
Competition. It's fierce in the banking industry, and Ujjivan's got pressure from, all sides. Traditional banks, other small finance banks, even those fintech startups.
So how do they stand out? What's their, secret weapon?
Their focus on financial inclusion could be a big one. They've got this deep understanding of underserved communities. They've been reaching those customers that traditional banks often miss. And those digital initiatives, if they really nail them, that could be a big differentiator too.
But their digital transformation is still kind of a work in progress, right? We talked about how they haven't, fully implemented those RBI guidelines on how they report digital banking.
Right. It's definitely something to keep an eye on. Their technology, their customer service, even their risk management.
Yeah.
All that has to keep up with their digital ambitions.
So Ujjivan's facing some big challenges, but they've also got a clear vision, and they're building on a pretty solid foundation. They're at this, like, crossroads trying to balance their past and their future.
Yeah, their story is kind of like a microcosm of what's happening in the whole financial industry, right?
Yeah.
The rise of fintech, more focus on financial inclusion, the whole challenge of balancing growth with risk. It's fascinating.
So by understanding what's happening with Ujjivan, we can get a better sense of those bigger trends, right? And what they mean for the future of, finance in general.
Absolutely. And as we wrap up this deep dive, I think the biggest question is, can Ujjivan pull this off? Can they make it through this transition period and come out stronger, more diverse, more digitally focused?
It's a story that's still unfolding. Who knows what'll happen? Will their strategy work? Will they stick to their mission? We'll have to wait and see.
That's what makes it so interesting.
Well, thanks for joining us for this deep dive into Ujjivan's small finance bank. We hope you learned a thing or two.
And remember, we just scratched the surface here. We encourage you to, dig into those reports yourself, see what you think. What do you think the future holds for Ujjivan?
Until next time, keep exploring, keep learning, and keep diving deep.